How would you assess all this so far, right? We got Amazon still to come, and Nvidia is a little way, but I think we have a good read on what's happening.
I think the biggest takeaway so far, Scott, is we could have had probably, 3 or 4 markets in turmoil specials at 7 o'clock in the last month. And yet, here we are, NASDAQ up on the year, other major indices up on the year. This is a market that wants to go higher, despite, put-call ratio being so high. Second takeaway, I'd say, on the Mag 7 specifically, Scott, though, is that, the results have been fantastic overall. However, as you kind of have alluded to earlier in the show, I think we're sort of hitting against the upper limits of valuations with these companies, and so it has to come, as you said, from the earnings themselves to drive these stocks higher, and the multiples are kind of stretched. So that's tough for a name like Google, obviously, as we saw last night. But it's going to be, you're going to have to pick and choose your spots with the Mag 7 in 2025, is my belief. It's just not going to be straight up the way it has the last 2 years.
In terms of valuation, I understand the argument, but Alphabet's like 20 times. It's 20 times forward PE. Meta's not historically rich, is it? Nvidia, that's your stock. It certainly, people don't make that argument about Nvidia.
No, I'd say like Tesla and Microsoft are kind of the two most extreme from a valuation perspective, but some would say they deserve to be because of their business model and because of their growth prospects. A name like Google has kind of been the laggard in the pack. And that's only really changed in the last couple of months of the year when they came out with their Willow quantum chip, and it really kind of shook people up as, hey, here's a whole new category that we never factored into our sum of the parts for Google. So you're right. You gotta look at each name specifically. However, in general, I would say a lot of them have tracked up. Apple is a name that's tracked up. So out of the 7, I like Nvidia the most. I own it right now. I like Meta, and although I don't own it, and I don't own Tesla. I don't own Apple, but those are the 4 names I expect to traffic in this year in 2025.
Reiterating the stock as its top pick, Morgan Stanley pointed out that the DeepSeek sell-off was a chance to purchase. According to analysts led by Joseph Moore, while short-term business was strong, Blackwell supply visibility kept growing, and customer spending intent was evident. Sentiment for the shares had deteriorated on possible longer-term problems. The analysts noted that DeepSeek created certain obstacles concerning export regulations and longer-term investment. They pointed out that it was one of several significant advancements in the field of artificial intelligence that had occurred in the past year. Hyperscale cloud computing giants' reiteration of their substantial data center spending plans this week helped to boost leading AI chip stocks. Following worries last week that businesses could cut down on expenditure after learning that China's DeepSeek had developed a low-cost AI system, the comforting reports were released. Amazon.com, Google parent Alphabet, Facebook parent Meta Platforms, and Microsoft all reported greater capital expenditures for Nvidia, Broadcom, and Marvell Technologies. Late Thursday, Amazon said that it will increase its capital spending by 29% to over $100 billion this year. Alphabet announced earlier this week that it will increase its capital expenditures by 43% to $75 billion in 2024. In its fiscal year that ends in June, Microsoft has said that it will invest $80 billion in the construction of artificial intelligence data centers. Additionally, Meta stated that it intends to invest up to $65 billion in capital expenditures by 2025. The success of DeepSeek's low-cost AI system isn't making hyperscalers reconsider their intentions to make significant investments in state-of-the-art data centers for AI. Investment firm Morgan Stanley released a positive report on Thursday on Nvidia, the leading AI chip stock. With a price objective of 152, analyst Joseph Moore reaffirmed his top pick buy recommendation for Nvidia shares. Nvidia's shares increased 0.9% on the stock market today, closing at 129.84. According to Moore's client note, CapEx feedback from Nvidia's biggest clients reinforced investment patterns and highlighted a persistent short-term supply-demand mismatch. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
You mentioned Nvidia. How are you reconciling this DeepSeek news in your own mind as it relates to the stock? What do you think it's worth? Are you as resolute in that belief as you were pre-DeepSeek news?
Well, DeepSeek, definitely was a shot across the bow for, American tech. And I would say most of all to a name like OpenAI, because it really sort of put it under scrutiny. It's not enough just to raise billions of dollars from venture capitalists who have an endless checkbook and just think that you can spend, and you're going to have the best models. I think what DeepSeek showed is that ingenuity and kind of necessity being the mother of invention, and how you optimize your different algorithms to get the most out of your software can mean just as much as the Nvidia chips themselves. So I think I saw more of a threat to the big LLMs, Anthropic and such. But for Nvidia is such a poster child for AI in general, and so we have the double ETFs, the triple ETFs. So it just was such a shocker that it really took it down. I stuck with it because I believed it was overdone, and despite the fact that we have to work smarter at how we build these models, I don't think there's anybody who's going to pass on the opportunity to get their hands on some Blackwell chips or Rubin chips next year if they have the opportunity. So I think the order book for NVIDIA is going to show to be really strong. We've seen that with the Google CapEx guide and the Microsoft CapEx guide. So I expect NVIDIA to be just fine.
The rise of Chinese AI rival DeepSeek hurt a number of technology equities, including Nvidia. The pullback is viewed by an expert as a chance to purchase. The analyst for Nvidia, Joseph Moore, an analyst at Morgan Stanley, has maintained an overweight rating on Nvidia with a price objective of $150. The conclusions drawn by the analyst. In a recent investor note, Moore stated that DeepSeek might provide some long-term challenges for Nvidia. However, according to Moore, short-term tests are getting stronger for both Hopper and all Blackwell varieties. According to the analyst, Blackwell's supply visibility is increasing, and it is evident that clients want to spend money. The DeepSeek sale offers a chance to buy. The analyst continues to rank Nvidia as their top choice. According to the analyst, DeepSeek represents a significant evolutionary advancement in the field of artificial intelligence, but it comes at a time when Nvidia is and will continue to enhance AI performance. The advent of DeepSeek may provide Nvidia with a number of challenges, such as further export restrictions, a different financing environment for AI spenders, and a decline in investor sentiment. The skepticism is overpowering, despite the fact that we have multiple grounds to believe that massive cluster builds will continue, mostly because the architects of those clusters are making such loud demands every day. Moore stated that Hopper and Blackwell are becoming more confident and that Nvidia will likely provide generally good commentary in the company's next quarterly financial report. The revenue formula for Nvidia's cloud customers is still straightforward. The more GPUs I purchase, the more money I make. Nvidia price action. Over a 52-week trading range of $66.25 to $153.13, Nvidia's stock is up 2.5% to $127.92 on Thursday. In 2025, Nvidia's stock is down 7.4% so far, but it has risen more than 87% in the last year. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
The argument everyone's making is that, okay, listen, it's great, but it can't go on. It's almost over. The next phase of AI moves past the chips, past the picks and shovels, and it's time to start looking for names that are doing well with the AI technology, like a Meta. How much do you buy into that, and when does that have to show up in your portfolio? Because you still like the hardware names.
Absolutely, Charles. So as long as you're seeing surprises to the upside on the CapEx side, there's going to be surprises in earnings on the hardware place. So we like hardware still here. We think there is a lot of opportunity.
So you like NVIDIA more today than you liked it yesterday?
Absolutely, especially after the CapEx announcement from Google, right? So I think as long as you see dollars flowing, you want to be there. You also do want to be on the application side as well, right? So that's in much earlier innings. Companies screen a lot more expensive here, so it's a little more speculative, but we do expect a lot of upside there as well.
Anything that you're concerned about from a policy perspective? You know, DeepSeek came out. Some countries have put it off. Some agencies like the Navy here. President Trump talked out loud, perhaps, of maybe limiting the amount of chips that we can sell to China. Any of that stuff a worry for you long term, even though, or if it even happened, would it just be a short-term hiccup?
Well, I think right now we're viewing it more as a short-term hiccup. However, depending on how the U.S. positions itself in the long run, it could have long-term implications as well. So I do think Nvidia being restricted from the Chinese market long-term, that is a problem and limits the upside opportunity for Nvidia. However, we still have a long way to go from here.
Long way to go. Hang in there.
The other large IT firms have been aggressive in their pursuit of the new government. However, Microsoft and Nvidia have stayed out of the Washington spotlight. Last Friday afternoon, Jensen Huang, the CEO of Nvidia, sneaked into the White House to have his first meeting with President Trump. He departed without a single public photo of the two being taken, and there was no fanfare. 2 weeks prior, Mr. Trump and Microsoft CEO Satya Nadella enjoyed a long lunch at his Mar-a-Lago resort in Florida. They hardly made the news and ate with little fanfare. At Mr. Trump's inauguration, neither executive joined his peers in the big tech industry who enthusiastically supported him. Rather, the two were on completely different continents. Mr. Huang was finishing off a trip to see suppliers and workers in China and Taiwan, while Mr. Nadella was heading to the World Economic Forum in Davos, Switzerland. Perhaps the most obvious indication that some businesses were attempting a more subdued strategy when Mr. Trump returned to Washington, even as some colleagues resorted to flashy shows of wooing, was the absence of the CEOs of two of the most valuable corporations in the world from the inauguration. It is practically business as usual for firms like Microsoft and Nvidia, which, in contrast to many of their competitors, haven't enraged Mr. Trump, according to S. Somasagar, a former Microsoft executive who is currently with Madrona Venture Group and frequently communicates with Mr. Nadella. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.